Alright, hey guys, welcome to the Adrian Finance YouTube channel. Today we're going to be having a little special video. I thought I was going to make one a little bit, towards the later half of the year. But I think right now would be the perfect time to be going over my portfolio. So yeah, right now I'm 20 years old and my stock market portfolio is worth around 20K. Well, really it's like 19.5, 19.6 right now. But it's finalizing a deposit to make it 20K. So this video is pretty much going to go over like, what I hold in my stock market right now. Or my portfolio, what I see going on for the later half of 2020 with the whole Rona situation going on right now. My plans on buying like dividend stocks, buying growth stocks, buying ETFs. Really how I'm gonna balance out the entire portfolio. And pretty much going over like how the Feds are doing everything. Is it a good time to invest? What should you invest into? And my plans for the later half of 2020. Alright, hey guys. So to conclude with that. We're going to be going over my portfolio. So right now it is worth around 19,800, 18,900. I'm looking at right now in Fidelity. And fun fact, I accidentally just switched from Robinhood to Fidelity. I recommend Fidelity to everybody. It's way more better brokerage like overall. And then with Robinhood, I've seen a little bit like shortages here and there. So when the stock market has started to crash like in March and April, there were actually days where like Robinhood wasn't working and things like that, and that's pretty much unacceptable, especially if you have like hundreds of thousands of dollars or like $1 million in a brokerage. For that to happen is pretty much like bad news from there. Like if they can't handle that, just imagine if there's like a second wave or even with like a million more users and things like that. So I went ahead and just transferred all of my assets over to Fidelity. And it's been really good. Just haven't bought anything, just been selling pretty much everything. So yeah, right now going over my portfolio. So right now I hold 1 share of Apple. That 1 share I bought at 170, and is right now worth at 360. So I have a return on investment of 111%, which is really good. Wish I bought more at the time, but honestly, that was like right when I first started buying stocks, and I had like bought all over the place. So I had like almost like 40 shares at one time, or 40 like different stocks at one time. And Apple, I just unfortunately bought one at the time. My second stock is Microsoft. So I have 3 shares at 119, which is like a 65% gain since right now it's around like 197, 195 area right now on June 24th, 2020. So really good gain. Pretty much my portfolio is like 80% gain right now, which I've seen some like Robinhood traders are like 900% like return on investment with calls and stuff like that. But personally, I like to do long-term holds or even like dividends and stuff like that. So cash on hand, I have like around 18,800. It's pretty much ridiculous. I wish I had more into the market right now, especially with the Feds pretty much just pumping up the stock market like crazy. I could have made a little bit more money, but I honestly just chose to have it on the sideline. So where I live, the whole like Rona situation is getting pretty worse. So like right now, I really don't feel comfortable like buying any stocks, especially like Texas-based stocks and things like that. And right now, so since I haven't been like pretty much deploying any type of money to the stock market, I pretty much feel like everything's super overvalued. Companies like Apple, like Texas Roadhouse, companies that are shut down, their stocks are still going up, which for some reason blows my mind because, this happened like in 2018 where like a company just cut revenue, their stock would have been plummeting like, pretty much like 90% decline. But since the whole running situation, I guess it was like kind of like I don't know how to say, like a special offering where like if you go bankrupt or if you like miss earnings or something like that, and people see that you have a decline, pretty much like Robinhood traders are gonna go ahead and just purchase your company. Like Hertz, I think was like one of the most popular ones where like it shot up like 600%. That's something that I just don't like doing. It's a little bit more like riskier than my intentions. I like having like consistent dividends or like just long-term holds. In like the long run I'll be able to get the gains. It's just if I bought like Hertz at 500% and then the next day it dropped down 300%, I'd pretty much lose all my money. So it's a whole situation that I don't like getting into. And right now I'm kind of like in a 50-50 kind of thing where should I buy an ETF or should I buy like an actual stock? So stocks that I've been looking into are like Alphabet, Apple, Amazon. Pretty much like the 30 companies in the Dow are like ones that I like doing. I like to repurchase JP Morgan just because I bought JP Morgan like pretty much at historical highs. It was just like around like 130, 125. So I like companies like that, but like in the long term, to be able to hold an ETF like the Vanguard S&P 500, dividend aristocrats or anything type of thing like that where I could hold like for 10, 20, 30, 40 years, I'll feel way more comfortable holding that, collecting dividends, and then just doing compound industry on top of that. So just to go over like my sales, I sold JP Morgan for like a 10% loss, which is around like $1,000 that I lost. I sold Tesla for, I believe it was 110% gain as well too. So I profited like around $500, $600 off of that. I sold Alphabet at a 40% return, which is around like 35% return. So really good. I made a couple like $2,000 off of Alphabet. But yeah, right now everything's like super overvalued in my opinion. The feds are pumping into the stock market, so it's pretty much like a bubble right now. So in my personal opinion, I don't think stocks should be this high like ever. So like for example, Texas Roadhouse or then the airline stocks and things like that, or even Disney, where like 35% of Disney's revenue is off their parks, but their parks are shut down, but yet their stock continues to go up, or even just stay like at a median price point. I feel like with the whole like virus situation, I believe I should wait, just keep consistently investing into my portfolio, but just not deploying any type of money. I would like to have Apple like at 160, 170, or just have like a perfect deal, where like I believe it's like Warren Buffett who taught me this, but he was like buying stocks is like playing baseball, where like people could just keep throwing balls at you, but you gotta wait for the perfect pitch to be able to swing and purchase it. So obviously I did that with Apple, I did that with Microsoft, Tesla, and Alphabet, but I just didn't deploy enough money, to make a consistent profit and things like that. So personally, for 2020, I'm gonna just keep holding cash. Probably get it to around like 25, 26,000, and either do it to like Apple or like like a big Dow company, or go ahead and just keep saving it, wait for a big dip, buy the Vanguard S&P 500, like VOO I believe is a ticker symbol. So that's one that I've been like really interested in buying, consistent gains. And with the whole virus situation going on, I would rather have the diversity of 500 companies compared to 1 or 2 companies. So with the 20,000, if I did like each company does 25%, where it's Apple, let's say Amazon, Microsoft, and let's say Southwest Airlines, which is like one of my favorite companies too. If we did it like that and one of them were to go down, that would be 25% of my net worth gone like that. So it's around like $5,000 that I'll be losing out on pretty much, right? So I'd rather have that 20,000 into like 5-6 different ETFs, where if I buy in the dip, I'll still get the 30 to 40% return, but I get a better diversity and a better long-term hold. So I mean, for example, if you have 500 companies and 25% of them were to go down, you still have the 400 and something remaining, where they can still be able to help you out like in the future. Or even if like some companies enter the S&P 500 and other companies exit, at the long run they're still going to be going up and going up and going up. I believe VOO is around like 10% every year, anywhere between 8 to 10% a year, annually. And then like Tesla and things like that, they're slowly going to get into the S&P 500. So right now, my personal opinion, wait for the dip, stay super cash heavy. Don't worry about these other like Robinhood traders like making like 700% return. That's like really risky, and you really only hear about the ones who like make crazy amounts of money, not the ones who lose like crazy amounts of money and things like that. And then another thing is, I would like to have 50% into growth, 50% into dividends. But honestly, my outlook on stocks is gets to like around 60 to 70 K like in my portfolio, and try to average around like $500 to $600 a month, just off consistent dividends. So whether it be from monthly dividends or quarterly, and then go ahead and just start like real estate. So that'll be in the future. I'm 20 right now, and with the whole virus situation going on right now, I probably won't be till like 23, 24 until I buy a rental property. But yeah, right now I'm trying to maximize my profits. Go ahead and buy like perfect like A1 companies at a really good price, pretty much like Warren Buffett does. And then slowly bring my portfolio value up and up. So that's like kind of like my outlook for for 2020. Every day might change. I heard something about like this dam breaking in like China, or like if the coronavirus situation gets a little bit more worse. Just give my little like 10 cents on the stock market. Well, thank you guys for watching, and I hope you enjoy.